Good morning, and thank you for joining us for today's Daily Market Outlook. Joining me today is Emily from our trading room to tell us more about the recent developments. Emily?
The US dollar rose, driving its peers to multi-year lows after Friday's blowout US jobs report underscored the strength of the economy and muddied the outlook for further Federal Reserve rate cuts this year. A recent surge in US Treasury yields may gain even more momentum after a strong jobs report reinforced expectations that interest rates will stay high for longer and raised the spectre of benchmark 10-year yields hitting 5%. A level that some fear could rattle broader markets. US stocks declined to start the week, with the S&P 500 hitting a two-month low as bond yields surged following strong payroll data last week, reinforcing bets that the Federal Reserve will maintain a hawkish stance through most of the year.
The dollar-yen pair edged lower in the last session. The MACD is giving a negative signal. The Bitcoin-dollar pair plummeted in the last session. The ROC is giving a negative signal. Gold prices plummeted in the last session. The stochastic indicator is giving a positive signal. Crude oil prices saw moderate gains in the last session. The stochastic RSI is in overbought territory.
With pivotal data releases scheduled in the coming days, the economic calendar provides insight into which financial reports and economic updates are most likely to steer market activity. Traders should prepare for possible volatility. These economic indicators are set to guide market sentiment. Keeping a close watch and adjusting positions as necessary can help mitigate risks and capture opportunities.
We hope that you've enjoyed today's Market Outlook. On behalf of all of us here, we wish you a productive trading day. Be sure to log in tomorrow morning for the latest news and events from the financial markets.
Your trusted choice in online trading.